What's up, guys? My name is Nick and welcome to the channel. In today's video, I'm going to be talking about RYLD, which is the Global X Russell 2000 Covered Call ETF. But before I get into that, let's look at my portfolio. So for the week, I actually had a market gain of $897.06, and I earned $39.19 in dividends, and I actually broke $47,000 for the first time, or maybe the second time this week, which is pretty awesome. And so what I wanted to show you here is actually the the first quarter of the year, where I had a market gain of $131.62, which, while that isn't that high, I actually did outperform the S&P 500, which was down about 5.32% for the first quarter. And then I also earned $513.49 in dividends, which is pretty incredible for the first quarter. And so I'm just going to show you my stocks real quick. It looks like AbbVie performed the best, AbbVie, Mo, and Merck. And then if we just scroll down to the bottom, my lowest performers, Home Depot, Clorox, and 3M. And a lot of that for my lowest performers are just Home Depot shot up because of a lot of people working from home, doing projects that they put off until later. And then Clorox had a huge run up during the pandemic for people buying cleaning supplies. And then I think now 3M is being in the process of being sued. So that's why it's down a lot. However, as you guys have known, I've been buying up a lot of Home Depot stock because I still think they're a solid company and they grow their dividend by an insane amount every single year. And speaking of dividends, before I go into my activity feed, I wanted to show you my dividend growth chart because I don't think I pulled it up in a while. And if we scroll down here, you can see March of 2022, I actually earned $229.65, which is the second time I broke $200. And I was not expecting to break that anytime soon. And in fact, my goal for 2022 is to earn $200 a month on average. And if we look at this number right here, for my current 3-month average for dividends, I'm earning $195.95. And in my first 3 months of the year, I earned $587.89, which is amazing. In fact, the dividends I earned from the first 3 months are more than what I earned in 2020, and it's over a third of what I earned in 2021. So guys, this just goes to show you how powerful dividend growth investing is and how important it is to consistently invest. Because while dividend growth is great, you still have to invest that money into it. And as you can see, also I earned $4.36 to start April off, which we can go into my activity feed now and check that out. So if we go back to the beginning of the week of last week, I deposited $125, as I always do every single Monday. And I had 5 buys, which were, like I said, Home Depot, Texas Instruments, Microsoft, Pepsi, and American Waterworks. 5 great companies that I love investing to. And then next, on March 29th, I had my first dividend from the topic of today's video, RYLD, of $11.73. And then I received $29.04 from QYLD. This is actually the second dividend I received from QYLD. If I go back, and if I can find it, you can see that I earned $26.86 at the beginning of the month. And if I would have bought RYLD a little bit sooner, I would have received 2 dividends from them. And so then I had 3 buys for $40.78, Clorox, more Home Depot, and some more Pepsi. And then I actually received a dividend from Pepsi on March 31st of $6.64, $21.75 from Good, and $7.68 from LTC to finish off the month. And then on April 1st, I received $4.36 from ADP. And then also on April 1st, I had two buys, which more Home Depot and more Texas Instruments, which I believe we're going to be seeing a lot of those. But I'm perfectly fine with my portfolio automatically reinvesting into both of these companies. And then so let's go over and check out RYLD. So like I said, it's the Global X Russell 2000 covered call ETF, currently priced at $23.97. They have a lower market cap than the other ETFs I've reviewed at 1.23 billion. However, they have a dividend yield of 11.92% and a lower expense ratio of 0.5. And as always, this page doesn't show the expense ratio, but if we take 11.92 and subtract it by the 0.5 expense ratio, we get a solid dividend yield of 11.42%, which I think is great. And then let's go over to their information page. This just says reasons to consider RYLD, which basically RYLD is very similar to QYLD. The only difference is RYLD tracks the Russell 2000, QYLD tracks the NASDAQ 100. And it says RYLD seeks to generate income through covered call writing, which historically produces higher yields in periods of volatility. RYLD makes distributions on a monthly basis. And RYLD writes call options on the Russell 2000 index, saving investors the time and potential expense of doing so individually. And this is actually a relatively new ETF, which has an inception date of April 17th of 2019. So very new. However, like I said, this is the same company that does QYLD, XYLD, and they've been doing covered calls for years. So even though this fund is new, I imagine the strategy is similar to QYLD. So they have plenty of experience. And something that's interesting about RYLD is their number of holdings is 2, which if I go down here, you can see those holdings are the Russell 2000 ETF and cash. And something else I wanted to show you was just comparing the Russell 2000 to RYLD. And so far for the year, RYLD is completely outperforming the Russell. However, if we go since the inception date, the Russell 2000 is destroying RYLD. So just Matt depends on when you started buying. And next I want to do a portfolio back test. So we have $100,000 with the dividends reinvested, and we're showing the income. And this time I have the SPY, RYLD, and VTWO, which is the Vanguard Russell 2000 index, as you can see right there. And so with the initial balance of 100,000, the SPY ended up at 145,361, which shouldn't be a surprise. However, the Russell 2000 ended at $127,491, RYLD at $122,231. So they're not that far off. And you can actually see that RYLD had a better year than the Russell 2000 index. And so far, RYLD has had the lowest worst year. But then if we go down here to the income, you can see that obviously RYLD crushes everybody. In 2020, RYLD, or SPY, had $1,782, RYLD $10,071, and the Russell $1,104. And then in 2021, we have the SPY at $1,819, RYLD at 14,073, and the Russell at 1,552. Then so far in 2022, the SPY has generated $438, RYLD 3,498, and the Russell $187. So when we look at the Russell 2000 compared to RYLD, yeah, the Russell 2000 is outperforming it. The S&P 500 is outperforming it. And if you've seen any of my other videos with the back tests, you would know that the NASDAQ would be crushing all of those, some of them probably combined. But what I do want to say is this is my income portfolio, the quadfecta, where I own QYLD, JEPI, NUSI, and I just added RYLD. So the purpose of RYLD and all of these funds really that I've reviewed over time is just to receive income. It's not really about receiving capital growth or capital appreciation. If what you're looking for is capital appreciation, or if you're on the younger side, I would definitely recommend looking into the S&P 500 or the NASDAQ 100. Now, if you're older and you're soon to retire, I would look into buying these income stocks. And another thing I wanted to point out was that a lot of people, as they get over, they sell some of their stocks and buy bonds, but bonds have really low interest rates or sort of dividend yields that you might actually consider using JEPI and NUSI to replace the bond section. So you'd have 60% stocks, which would probably be the S&P 500. Then you'd have 40% of your portfolio split into half of it JEPI, half of it NUSI, or you could even do the 40%, have it an even split on all four of these stocks. And I'm going to go into my research tab, because if you own the 4 stocks in my quadfecta pie, you'll be receiving a dividend yield of 10%. Of course, that's minus 0.53. So it'd be more like a dividend yield of 9.47%. Whereas if we look at my bond pie, even with just 2 bonds, I'm receiving a dividend yield of, I would say, 2.76%. So as you can see, owning the quadfecta, the income stocks, gives you much higher dividend yield that you would hopefully be able to live off of in the future. And actually, while we're here, if you look at my total market gain, $6,000.45, or $6,045, and earned dividends of $2,500, which is absolutely insane. But guys, thank you for watching, and get your $50 free by signing up to N1 Finance down below. And guys, get 5 free stocks when you sign up to Webull with my link in the description. So don't forget to like this video, comment down below. I'll be answering all your comments. And if you'd like to see more content from me, feel free to subscribe.